Hello and welcome. This is Roy. I've just finished to record a very long video, 77 minutes video for my subscribers, and you will see me introducing all the different markets that I covered. If you are interested in short-term trading, I've got several opportunities for you in this video. If you are interested in long-term strategy, whether it's in Forex or commodities or stock market, this video could help you. This video could help you to plan the days, weeks, and possibly months in advance. The only thing you have to do is give a try to my service. Give a try to my service, otherwise you will never get the full picture of what a long video can do for you. If you take a trial for just 1 week, that would enable you also to access the archive, and if you have a bit of time, you could watch hours and hours of analysis and see how my work helped in the past, and you can see how it can help you now and in the future, or it cannot help you. It depends on your attitude, it depends on your way of looking at things. My service is not good for all people. It's really a matter of attitude, like in everything in life. So for now, I hope that you enjoy this clip, and I hope to see you visiting my website and supporting my service. All the best and have a good week. Bye now. Hello and welcome. This is Roy. I have many interesting charts in this video, and in the Forex section I'll be focusing particularly on the pound. And here is the list. I've got the dollar index, the euro US dollar, the US dollar Swiss franc, British pound US dollar, British pound Thai baht, British pound Chinese yuan, British pound Canadian dollar, Australian dollar, British pound Israeli shekel, the euro Japanese yen, British pound Japanese yen, US dollar Japanese yen, Australian dollar US dollar, gold, silver, light crude, Brent crude, gasoline, and then the bonds, TYX, UST bond, the TLT, Euro bond, Euro book sell, long yields, and then the stock markets, Dow Transportation Average, the S&P 500, the S&P 100, and I'll terminate the video with a look at the EU Stocks 50. Okay, stock markets. That's the Dow Jones Transportation Average, that's the weekly. Despite the fact that I don't have terribly clear wave count for you here, I decided to include it. And the reason I decided to include it is more to focus on the time scale than on the price scale. Because if I'm showing you here the weekly, and if you have been following the videos for quite some time, you know that I am very keen on the idea of the triangle here. Do you see? This is something that took, 5-6 years to build up. And the surge is very convincing that it's real, and of course it's got plenty more room on the upside here. You see this total explosion here. But what I want to emphasize is the fact that I think we are seeing something that is maybe less than half of the real move, the complete move that we will get from the end of the triangle right here. I think what we are seeing here is less than half. We just have a 1-2 and maybe another 1-2. There is plenty more upside coming here. This market is going to explode higher by thousands of points. Sounds completely ridiculous, but I have something interesting to tell you. You know, I read an article yesterday, very interesting, about it's actually quite a few articles that I've come across, an analysis of some interesting stuff that the Fed is looking into charging banks for deposits. So, in other words, the Fed is trying to push the banks into negative interest rates on deposits. Now, what does it mean? It means that the banks are going to be punished for keeping deposits. Now, why would the Fed want to do that? They want to do that because they want to push the banks to give loans. They don't want the banks to sit on multiple sums and earn interest, however minuscule, and not take risk and provide loans to small businesses to help the economy to grow. So they're going to push the banks into drive them up the wall. Get rid of that cash. Give it away. Give it as loans. And what that's going to do is also it's going to affect ordinary people who have savings. Yeah, you get almost nothing on your savings in the US, but there are people who are just happy to keep their money in cash. Now just imagine for 1 minute, you got I don't know how much, hundreds of billions, trillions sitting in cash. People are just waiting, don't know exactly what to do, but just keeping some money in cash, and then they wake up and they see that in fact they're losing every day because there is negative interest rates. What do you think they're going to do? Buy bonds? That's the last thing they're going to do, because in such environment the bonds are going to crash. The bonds are going to fall all the time. Well, who is going to put his money in bonds where de facto you're going to lose money? You're not going to put it in the bank. You're not going to put it in the bonds. What is left? Equities. Equities. That's where they're going to put their money. And that's how we're going to have continuation of this strong bull. So that maybe explains why we're going to see, if you like, 2 times what we have seen already here. So now let me go to the weekly from close, and we'll see in fact what's the wave count that I told you is not terribly clear. We started from here, this surge of a 1, 2, 3, 4, 5. That's 1, that's 2, okay, that's 1, that's 2. We have a 3. We are probably working on the 4th, or maybe it's even more bullish than that. We could have seen a 1, 2 here. It's not going to make a huge difference. The point is we are going higher, and we are going higher for quite some time. That's 1, that's 2, or 2, 1, 2, and here I told you it's not very clear. If the third wave ended here, we're in part of the 4th. If the third wave ended recently, the market shouldn't rally much higher. It should stay around here to deliver the 4th wave. But even this 4th wave, if you ask me, is going to be a tight range affair, and soon we'll just continue to go higher.